Hello everybody, welcome back to another episode of Finance Agents Live. This is episode number 39, and today we are lucky enough to have Ed with us. Thank you very much for visiting. Ed, how are you doing today?
I'm doing great. Thanks for having me. It's a pleasure to be here.
Our pleasure. All right, so Ed runs our unsecured finance division. He also helps us with personal loans. Now, those programs are similar, but they're different enough that we decided let's break those into two shows. So if you like what you're hearing about today, you should also come back next week and hear about the personal loans because they're similar and different, and they're both very exciting programs, something we've done a lot of. Although the unsecured finance that we're going to talk about today, we've been doing this forever. This is literally the first funding product I offered when I first got into the business about 10 years ago. So now if you're new to the show, you haven't been here before, join the conversation, subscribe to us on YouTube or whatever the heck you might do on Facebook, I don't even know. Your likes and subscriptions help us help more people just like you. But moving on, let's jump into the meat of this. Remember, next week, quick funding personal loans. That's the coolest thing about it. Relatively reasonable interest rates. They fund very fast. So, and just to kind of like drop a little tidbit, we had one client get approved in the same day for what ended up being $169,000 in personal loans. Yep. And now we're just waiting for a couple things to happen, and we're going to put him through this unsecured finance program. Might be able to get him another $100,000. This client might end up getting $200,000 to $300,000 in funding through the combined programs. Yeah. So if that sounds interesting to you, come back next week and hear about the personal loans. All right, but jumping into unsecured finance. It goes by a few different names. We've got a few of them up here. What are the names that stick out to you?
A lot of times what I hear is it's unsecured business lines of credit, credit cards, LOC, U-Block is another one.
U-Block, I've heard that one a lot.
U-Block.
I think that's kind of a weird one.
Credit card stacking, alternative funding. So there's a lot of names out there.
All right, but really what it comes down to is just credit cards.
Correct.
Generally, business credit cards. They could be personal credit cards. And why does everybody say U-Block and other things like this when it's just credit cards? I think it's to make sure that people understand the benefit of it. I think a lot of people hear credit card and they're like, well, I get credit card offers in the mail all the time. But this program is a lot different than just picking up an app in the mail, mostly because you can get so much more funding, so much quicker, right?
Correct.
What you could get over 3 years, we could set up in a week or two. So we have some examples here so you can really understand what the opportunity is, what the possibilities are. So this first one's a coffee distributor. Tell us a little bit about this client that you helped.
He came in not too long ago, probably about a month ago, and he was looking for as much as he could. So we went and tried to shoot for the max for him. We raised a total of $123,000. My projection was about 75, and that comprised of 6 cards. And we could have got more, but he only wanted business credit card only, so we kind of had a cap. Otherwise, we could probably get like another 30 to 40,000.
Okay, great. So that's a pretty good result. So let's talk through this a little bit just so people understand. There's a projection listed there. The projection, what is the projection? How does somebody get a projection?
Well, first of all, they have to submit a credit report, and based on the credit worthiness and the revolving account history that you have, I come back and give you my secret sauce, if you want to say that.
You give away the secret sauce?
I give away the secret sauce, and from there, it's just a lot of the trend of the banks that I work with. I just see what they are lending out at that moment or present time, and we put that together, and that's how we get the projected amount.
Okay, so literally thousands and thousands, I don't suppose you have any idea how many credit reports you've reviewed over the years. There was a time where you were reviewing as many as 70 in a day, if I remember.
Yeah, it was up there.
A lot. So he's seen a lot of credit reports, and he's watched the funding amounts as they go over the years. We know exactly what banks to go to, who's lending based on your scenario. That could be geography, that could be your industry type, that could be time in business. There's a lot of different factors. What cards you already have, what banks you already work with. There's a lot of different factors. I think it's something like 120 different data points that will be reviewed on your credit report. So he goes through all that, and based on that says, okay, this client's going to qualify for this range. Typically it's a range. So it won't say $75K, it'll be 60 to 90.
Correct.
How big of a range do you typically have there?
Probably like 25,000 in increments.
Okay.
Yeah, but that's usually the projected amount.
All right. And how frequently do you think you're hitting within the range? I know the actual stats, but
I am pretty conservative with my projection, but I usually surpass them most of the time. But yeah, pretty accurate, or if not a little bit more, 30,000.
We're seeing over 90% of our clients are actually coming within that range, so we're pretty darn good at the accuracy. Although often we are able to go over that. Not often, obviously, much more than often. It's 90% within the range. But we do have some examples here where we've done that. But that last client's a good example where they wanted business credit cards only, and it can be business or personal cards. What's the difference between, why would somebody want business only?
Well, there's a big difference. A lot of it is creating separation from personal and business profile. So he wanted everything under the business, didn't want it to impact his personal negatively. So that's why we went for the business route.
Okay, so the key there is a business credit card will not show up on your personal credit report as long as you don't go into default or do something crazy.
Yeah.
So you can set up $100,000 in credit cards guaranteed by the owner, which is required, but it doesn't show up and it won't affect you when you go to apply for a loan. Like Ed's closing on his loan today for his home that he just bought, and he could have a ton of business credit and it wouldn't even show up there. So
Correct.
It's a way to create that separation. All right, so here's another client, a local newspaper. Looks like we funded $105,000 and the projection was 75. So there's an example of us going over the mark.
Yeah,
again.
This one definitely stood out, mainly because this was one of the highest funding I got through one card.
Yeah,
And it was
75,000
yes.
on one card. That's a lot.
Yeah, it is. I was really shocked that I saw that.
Okay. So, and the contributing factors, he's out of business for a long time.
Yeah.
Local newspaper, and the local newspaper is not dying.
No.
Right? No. The whole newspaper industry is maybe on decline. Although local papers, I hear, are still holding firm better than some of the large national
because
ones.
they get a lot of community involved. Sometimes they would advertise within the community, offer discount, and then they publish it. And the business was going on for about 20 years now, so there was a lot of depth in the history of the business.
Great. 2 cards, 105. All right. Here's the next one, the bakery startup. And when you put this on there, oh my goodness, I want to eat those. That looks really tasty. So tell us a little bit about this client.
This client came in. She had thin credit. In fact, she only had an authorized user account, but there were other deciding factors that I thought I could get funding for her. So I projected conservatively at 20,000. And the fact that she's a military vet, that opened up doors for other programs out there. So after everything's said and done, after 3 cards, we got about 40,000 for her.
By the way, what qualifies as military vet? If I was in the military for 1 year, am I a vet? Or do you have to do 5 years? Is there a certain number?
No, well, not just military vet. I mean, if you also have a relationship, like let's say, for example, you are married to a person who's in the military, that person can also qualify as well. So relationship within the military, it's fine. Years-wise, I don't think there's any guidelines or minimum.
What if my father's a vet?
Yeah, then you qualify.
There it is.
Yeah.
Boom, I'm in. Awesome. Okay, so Ed talked about that client having a thin profile. One of the things he looks at is how many other lines of credit cards, loans has the client have? And I think what he just said was the client literally had no credit cards at all, only one auth user account. An auth user is like if I have a credit card and I say issue a second card that Ed can use, but it's really my card. There's no financial responsibility for it. So this client, all they had was one authorized user account, which means they had no credit at all.
Nope.
And you were able to get them 40 grand.
Yeah.
That's great. That's a good result.
And the thing that stood out with this one was when I was looking through the credit report, I noticed that they had a couple of credit unions that were catered specifically to the military. And I just told the agent, hey, ask and see if she's a military affiliate. Fortunately enough, she was, and she moved forward.
Okay, awesome. All right, so let's go through the benefits of this program. Funding ranges from $20,000 to $125,000. That's what you're seeing. I mean, do you see a trend towards anything? What is the average around the middle of that, or?
Well, the average is, from what my experience is, about 70 to 80.
Okay. All right.
But
Well, that's
obviously,
good.
if you want to do a combo, add personal to it, it can potentially get higher than the amount.
Okay. Great. So one of the rules of thumb is you can get funding up to 5 times the maximum credit limit of one of your existing cards. So if I have a $25,000 credit card, then I can get 125 grand. That's 5 times that.
That sounds
That's sort of a rule of thumb,
accurate.
right?
Yeah, rule of thumb.
Okay,
Good
great.
place to start with.
All right, so no collateral is required. You don't have to put your house on. You don't have to provide your tax returns. You don't have to provide pay stubs. What do you have to provide?
For the UBF program, obviously you have to be incorporated in some form, whether it's a sole prop, LLC, corporation. We'll need to obtain a copy of your articles of incorporation just to show proof that you are actively within the Secretary of State website. Then you'll get a copy of your IRS confirmation letter. That's for the IRS tax purposes. And a copy of your driver's license, just those 3 items. And we should be good.
And that's it? Okay. So I don't have to have had a business for 20 years like that one client.
No.
What if I don't have a business at all? Can I incorporate and still get funding?
Yes. A lot of the clients that I work for are startups, so they are pre-revenue businesses, so it's definitely possible.
Okay, awesome. No location requirements. Can I be in Turkey? Can I be in Europe?
No, you have to be in states.
Okay, all right.
For the best results, yes.
But anywhere of the 50 states. So I could be in
Correct.
Alaska,
Yeah.
way in the corner. All right. And no term prepayment penalties. In short, these work like credit cards, right?
Exactly.
Use them when you use them, pay them off. You don't owe anything when they're paid off, and then you can use them again. So it's a great asset for your business long term. Any restrictions on what you can use the money for?
There are certain restrictions in terms of industry, but
Like what? Like what's something I can't use the money for?
gambling. If you're a gambler, obviously you can't use it for that. What's else? Another one. There are nonprofit. Some banks don't want to lend to that. So those are just a few.
Okay, all right. And then one of the things that people like about the program is that you're getting credit cards. Often they come with intro promos, right?
Correct.
It might be 6 months with 0% interest or 12 months. What are the promos that you're seeing right now at this time? Because they really change year by year.
Well, for the business side, it's usually from 0% for 6 months up to about 15 months, depending on the
Up
cards.
to 15 months?
Yeah, up to
Okay,
15 months.
that's a long time.
And the promos are usually for cash or travels perks.
Okay. So that's the business cards. Is it different on the personal ones?
Personal, I see more of both. Business, sometimes it's usually just for purchasing, whereas personal, you can use it for either balance transfer or purchasing. And the duration
Meaning
of
you
the
get
card.
a promo for purchases for business, and for personal, you get a promo for purchases and balance
Yes,
transfers.
correct.
Okay, all right. Another one of the benefits of the program is establish relationships with multiple banks. I know it sounds weird. A lot of people say, I don't want 5 credit cards. I want one line of credit for 100 grand. But what you don't know is I've had lines of credit where the bank decided, you know what, let's just terminate this line for whatever their reason. Maybe it's something with the bank, with their credit balances, and they decide to terminate a bunch of lines of credit. If you have one line of credit for 100 grand, the bank kills it, you're done.
Yeah.
It's gone. But if you have 5 credit cards, you're not going to get all 5 shut down. They might shut one down. You only lost 20% of your funding instead of 100%. So that's a real benefit. Helps build your business credit. And fast, how long is it? Let's talk about how long it takes right now. If I submit somebody this morning,
Okay.
when are they going to see what?
If you submit someone this morning, we'll go through their welcome call, hopefully within 24 hours. After that, begin funding. We can probably get results that same day.
Same day.
Yeah, depending on the banks. If it's a clean-cut file, we might get instant approvals. Otherwise, we may have to wait a little bit. But approval probably takes anywhere from 4 to 5 business days after the initial welcome call, and then usually 7 to 10 days after that to receive the cards.
All right, so I should expect to get a first card within a couple weeks?
Yeah, probably.
Is that
We
right?
started today. You probably get it next Friday.
Next Friday. All right,
Friday.
cool, awesome. So if you need money, next Friday, sign up today. All right, moving on. We got a heck of a lot of benefits. Let's keep moving. All right, let's talk about the current market. All right, so you've been doing this 7 years?
7 years, yes.
Okay, long time.
Long time.
So what are some of the trends you've seen over the last couple years, and what do you think is going to happen over the next year going forward?
Well, just based on what I've been noticing with the banks that I work with is that lending is still going to be there. I feel that the credit card industry is strong. Relationship with banks is a big factor. That's what I've noticed a lot. So when I look at the credit report, I look at the relationship you have that may open more doors to get more funding through them. So that's one of the key components.
Well, let's say I gave you the same client either today or a year ago.
Okay.
In general, is that client going to get more funding or less funding? Are they going to get bigger? Each card going to be, or there's the same amount of banks? Are you noticing a change in interest rate? Anything like that?
Interest rates, no. Promotions, they have been the same.
They've been the same?
Yeah, I
Okay.
have no changes in that from the banks that I been working with. What can I predict in the next few years? It's really hard to tell. I mean, but I don't anticipate this going away.
Okay. The interest rates are about the same now as a year ago, you think?
Yeah,
You haven't
the
seen
APRs.
any changes? How about the card size? You getting the same funding amounts per card?
Well, that's going to dictate on a lot of factors. Relationship with banks is one of them, like I mentioned. Also, they'll look at your revolving history, and one of the biggest factor that I see here is how long your business have been established. Obviously, if you are well established for about 10, 20 years, you might get higher limits. If you're a new company, you might be able to get strong limits as well, but it's really a case-by-case scenario.
Okay, great. All right, well, moving on, let's talk about some of the minimum and ideal requirements for a client who comes into this program. There's probably some modifications to our notes here, but the FICO requirement for somebody getting into financing this program is really a 700 or better, right? Is that, do you agree with
that's
that?
probably the minimum
Okay.
marker.
And then the ideal scenario is, what would you consider as ideal FICO score? 720,
Ideal, wow.
750?
Yeah.
We're not talking perfect scenario, not like an 899, but
I think 720 is a good start.
okay, 700 minimum, 720 is a good start. But if you get somebody to come and say, this is a good solid client, probably 750 or better. Does that sound right?
Yeah.
Okay, so there's no minimum time in business requirement, but if somebody has, say, 24 months, they're going to get better results. You agree with that?
I do.
Okay. What's sort of the target? You don't need, again, you could be a startup, so you don't have any minimum on gross revenue. But what about ideal? What's sort of, how much revenue for, let's talk about that client who's been doing business for 20 years, that got 70 grand on one card.
Okay.
And what was their revenue like?
Wow. That I don't remember off the top of my head.
Pop quiz time.
Pop quiz, yeah. So
I mean,
I have
was it in the
seen
millions,
companies.
you think?
No, I mean
No?
it really depends on the credit profile, personal credit profile. They leverage that. So I have clients who made 400,000 still, or were able to get 35,000 approval lines.
Okay.
So it really doesn't depend as long as you're showing growth in your business, your income is there, then you should be fine. But there is no set numbers, whether it's $1 million, $2 million, whether it's a $300,000 annual gross profit. It doesn't matter.
All right, so can you have a bankruptcy that's been discharged and qualify for the credit card program?
Yes, you can. Usually, we would like to see it been seasoned for at least 5 years.
Okay, so bankruptcy and then it gets discharged 5 years
after
later, it's
that.
still showing up on the credit report. They can
Yes.
They can get credit cards.
They can get credit cards. There are some limitations in the sense of that we may not be able to go back for business, but we can probably continue on with personal.
Okay.
But
That's good.
obviously, when that time frame, we would like not to see any more derogatories since
Right.
then. So if you were late, show signs of sporadic late payments, then that can obviously throw it out the window.
All right, let's say somebody just went through the process of buying a house.
Okay.
And they shopped around for the best loan, and they got 10 different loan inquiries, and that just happened a month ago. Is that going to kill somebody from getting into this program? Do they need to wait a certain amount of time, or will the bank understand, oh, they were getting a home loan?
Yeah, I think you have a 30-day grace period to shop around for your mortgage
Okay.
without really adversely affecting your credit score. So They will take that into consideration. Also, if you're looking for an auto loan, they realize that too. So those are the two factors that will still qualify you for the UBF program.
By the way, for our hard money real estate loan program, we just funded, was it yesterday? No, it was Monday. We just funded on Monday a client that came in with 251 inquiries.
Wow.
Have you ever seen somebody with 250? That's the most I've ever seen. I thought maybe you might have seen somebody with more. That is a lot.
Wow.
251. That's a shopper, man.
Yeah.
That's a window shopper.
He was probably just shopping in his sleep.
Just for fun, man. Ding, ding, ding. All right, cool. So documents. So what do you need if somebody's over there thinking, whoa, I want to get some unsecured finance. Unsecured, by the way, meaning it's not collateralized. Mm-hmm. There is a personal guarantee, but it's just not collateralized with your house. Or there's no UCC on your business. But if somebody wants to get this financing, what do they need to qualify? Or what do they need to submit?
Well, the first step is get a credit report, usually within 30 days. That's a good start. And then just from there, we go ahead and dissect the profile. And if it qualifies, then a projection gets sent out.
All right, where do they get a credit report from?
Well, there's a lot of places, but checkmycreditreport.com is one of them.
Check My Reports.
Check My Reports, sorry.
Checkmyreports.com is our link that we switch around to wherever we think is the best place for you to go at the moment. So a year from now it might be somewhere different. We'll just redirect it at that time. Right now it takes you to annualcreditreport.com, which is the government-provided source where all the big reporting agencies have to give you at least one report.
That's right.
Per year for free. So we like people to go there because it's free. But what are some of the other places people go to?
CreditCheckTotal.com, CreditKarma.com. Wow, there's what else is there?
There's a couple, right?
Yeah,
there's like
there's
two
a
or
lot.
three?
There's more than
maybe
more.
4.
There's a lot of. As long as it's within 30 days, then I can look at it.
Is True Credit still one of them?
True Credit,
You know what? They don't even
so.
call it True Credit anymore. No? It's called TransUnion. If you go to True Credit, it redirects to TransUnion.
Oh, I see. Okay.
But man, there's free credit reports, free credit scores, free check credit. There's like so many out there. It's ridiculous. Are there any that you cannot accept?
All I needed to see is just the information. I wouldn't say I can't accept all of them.
Does it matter if it's Equifax or TransUnion?
No, I can look at all of them. Either bureaus, all bureaus are fine, any bureaus.
Okay, great. All right, so get a credit report in, and within 24 hours, we'll tell you qualify for $1 million?
Sure.
No, generally 50 to...
I've got a question.
Yeah.
So do I need to buy my credit score and send it to you?
There are sites out there that will allow you to have a 7-day free trial, and then after that you can cancel it. There are websites that are for free, like Tim mentioned, the annual.
Credit Karma, for example.
Credit Karma, no, you don't need to pay for that.
So I think what he's really asking is there's sites where you can pull your report, but if you want to get your score, you got to pay for it. We don't need the score.
No.
We need the report. And so some people just send in their scores. Sorry, that doesn't work. You need the report, not the scores.
Exactly.
Okay. All right, let's talk about some of the industries this is good or bad for. And, so are there any industries where you say, get out of here, we can't help you?
Well, there are a few. Like I mentioned, the gambling industry. Sometimes there are some limitation to funding when you're in the cannabis industry. Also, nonprofit is another one that I usually see. Those are just the ones top of my head. I'm pretty sure there might be a few more, but I haven't really encountered those yet, I guess.
Right. Now, if you think you're on the border of one of these industries, like, for example, real estate is sort of a touchy one. If they think that you're using the money to buy a house, they don't want to give it to you. But if you're a property management company or using it to do improvements on a house, then it's fine.
Yeah.
And one of the things you can do is really be careful about the naming of your business. And since a lot of people are startups when they come in, we have some general advice about naming of your business in order to make sure you're not accidentally qualified as a gambling company. And a perfect example is we had a client come in recently where, I won't say the exact name, but the name made it sound like they were going to use the money to buy cryptocurrency, Bitcoin. And that is not something the bank wants to give you money for. When really they were doing consulting for people in the electronic exchange industry. Frankly, I don't understand exactly what it is, but it wasn't using it for funding cryptocurrency. So here are some naming conventions you can follow in order to make sure you don't accidentally get lumped in with the porn site or whatever you're not. All right. First of all, don't name your industry in the company name. Just leave it out. You don't need to put your industry name in there. Don't name yourself. So my name is Tim McCormick. Don't make it McCormick Industries. That's not be good because what if you want to sell the business 3 years from now? You can't really sell your own name. And avoid the unintentional industry references. Some of the ones we just named are listed on the next page. We've got real estate, gambling, drugs. Don't be 420 Incorporated or whatever. That's not going to help. International, you can ship things international, but don't say whatever. I won't make stuff up. But nonprofit is also something the banks don't really like because they want to see a business that's generating revenue. And so we have this naming convention that we recommend. Go pick a color, a pet, or a type of pet, stick them together, boom. All right, so color, blue. Type of pet, bulldog. You could be Blue Bulldog Incorporated. There. You could be anything. No one's ever going to accidentally think you are something you are not. By doing that, you can avoid any problems with any of those industries that we just mentioned. Okay, so, and here's an example, workaround. If you're in the real estate industry, maybe part of your business is buying properties, and the other part of the business is managing those properties. We can structure you and get financing on your property management side. As long as you have a name that isn't Mike's Flipping Houses Incorporated, then you're fine. You can be Blue Bulldog Inc. and you do anything you want. All right, so let's talk about the funding process a little bit. Of course, it all starts with finding the people that need funding. And so our finance agents that are out there, they do marketing. Generally, you want to market to people with good credit because that is the one thing that you need for this program. You can be new business, old business, you got to have good credit. So there's four ways to get a lead in the system. You can manually enter it inside the portal. You can send out the marketing links to somebody who's interested. You can send in an email via one of the email addresses. If it's a lead at 24 Hour Approvals, or if you have the credit report, send it to UBF at 24hourapprovals.com. Or last, just call up your on-site rep and they'll help you get it into the system. So those are the ways. Once the lead comes in, it goes to one of our member offices who will talk to your client, make sure it's going to be the right fit or that they don't qualify for some other program that might be better for them. And then the actual funding process starts. So let's talk through funding process. We talked a little bit on the time. How long does it take to get your money? I need my money now.
It can be as fast as the second week, and the completion of the program takes about 4 weeks.
Okay. What's the difference between as fast as and completion?
Well, when we receive approvals, just keep in mind that they don't all come in at once. So, cards will start trickling in. You might get one on Monday. A couple days later, you might get two more. So I would anticipate by the fourth week, you should have all the cards in your hands.
Okay.
So general rule, I tell my clients, first week is when we submit all the applications. Second week is when we should have an idea how much we're raising for you, your approval amounts. And then third to fourth week is access to the cards.
All right, what are some of the things that people can do which can help make it faster, or do they have any way to impact the speed of the process?
What I've noticed is if you have a relationship with a bank, sometimes they will send it expedited for you.
Okay.
Or you can call in and pay a courier fee to have it be sent to you sooner.
What's the courier fee? How much is that?
Usually anywhere from about $15 to $20.
Okay, so for say $20, you could get the card in a couple days?
Yeah, well, not all banks will offer this, but there are a few will.
Okay, that's great. All right, so let's say your credit came in, we gave you an offer, you like it, you sign up, docs come in Monday morning, first thing. It's going to come to somebody in your department. They're going to review the contract terms, program, and then what happens?
After everything is reviewed, then we send out a welcome email just to introduce ourselves and set up a welcome call. Once that takes place, we go over a 20-minute call just to confirm data, make sure that everyone's all on the same page. Once that is done and they're excited to move forward, then we create a bank list for them, have them take a look at it, and then from that point on, we'll get the application out.
Great. What are some of the things you go over on that underwriting, that welcome call, in order to make sure somebody fully understands what's happening?
Well, a lot of it is just reiterating what the agent said, and there might be some repetitive nature to the call, but there are some legal aspects I have to cover. I talk about the timeline that we just mentioned. We talk about the do's and don'ts of the program, i.e., don't go shopping with your credit while you're in a program because that can have an adverse effect on your score. We talk about the uses of funds. Also, we go over the consulting agreement, and just to weed out any miscommunication and give them the opportunity to ask me any follow-up questions. Sometimes people do have selective hearing, so we want to make sure that everything is addressed during this welcome call.
All right, some of the things that I've heard that have come up on a welcome call that have been problematic, some of the things that we're looking for, would be, first of all, they understand that they are credit cards, because a lot of people refer to them as lines of credit because they are lines of credit.
Yes.
But when they hear it's a credit card, they may say, wow, I didn't know it was a credit card. So
Yes.
want to make sure they understand it's a credit card. Another thing is I hear some people confuse the cost for us to do the service with the interest rate on the cards. So they might come in and there might be a 9.9% origination, which means if we get them $100,000, the payment due is $9,900. That's the origination. And then afterwards, they have the interest rate on the cards, which can range. What do you see? What are the interest rates range these days?
Well, anywhere from about 9.99. Well, I just probably
9.99.
I just confused you right there.
You did it.
So let's just say about 10, anywhere up to about 21% APR.
10 to 21. That's
Yeah.
where they're ranging.
But keep in mind, you have your promotions to begin with.
Right.
So
Okay, so that's the range on the accounts. Another thing that I've heard people get confused about is they say it's unsecured finance. That means there's no personal guarantee. And then we got to make sure people understand that there is a personal guarantee. I think this comes up most for businesses that use a credit partner. So if you have a business and you have bad credit, but you have a business partner with good credit, you can put them on as a credit partner and we apply that way. And that's the way you can get funding even if you yourself have bad credit. And more frequently, it's the credit partners that don't necessarily understand there's a personal guarantee.
yeah.
All right, so we got to make sure that happens too. All right, so they go through all that, they understand what's happening, then you start submitting to lenders, and sometimes they ask for additional documentation. What's kind of things do the lenders occasionally ask for that you have to provide?
They usually shouldn't be that much. If you have the articles of incorporation, the SS4, which is the IRS confirmation letter, and your not your social security, but your driver license, that's more than enough, I think.
Okay, all
And
right.
sometimes, to be quite honest, they don't ask for all those stuff.
Great,
Yeah.
even better.
Yeah.
All right, and then the cards come within 2 to 4 weeks.
Correct.
Great. All right, so let's go over some terminology. If you've seen many of my shows, you know the terminology is my favorite part of the show. I'm just kidding. I think it's always boring. So we always do try to have a lightning round here, but what's aggregate? Why would that word come up?
Well, it's definitely important to let the client know that it's not going to come from one source. So it's going to be aggregate or stacking, whichever word you want to use. It's going to be through a couple of lenders.
So if I get a pre-qual for $75K, I shouldn't expect one $75K card. I should expect maybe 5 on average?
Probably 4 to 5.
4 to 5,
Correct.
okay. All right, so that's aggregate. Moving on to the next one. Articles of incorporation. What is that?
Well, that's just basically shows your business existence and that you are actually incorporated in the state to be able to run a business.
Right, it's the paperwork that you file to form the company. All right, balance transfer. What's a balance transfer?
Well, it's moving and transferring a debt from one credit card to the other. Usually people do this because of promotional interest rates.
Yeah, we see a lot of business owners that come in, they've been using their personal credit to finance the business, they set up some business cards, balance transfer the balance from the personal cards to their business. Now their personal credit is amazing,
Yep.
and they've created that separation. So that's what a lot of
Exactly.
people use that for. Lightning round, Darren. Authorized user. Okay, what's an authorized user account? We already went over that earlier in the call. It's an account that's not really yours, it just shows up.
Yep.
And certificate of good standing. When do you need a certificate of good standing?
Well, it's only required in certain state, I guess. Not all state will require it. So I see this come up every so often, but the most important thing that the banks are looking for is more so of the articles of incorporation.
Okay, so a certificate of good standing is a letter from the state saying, yes, they're still good. Or it might be in another state, like it's a California corporation operating in Nevada. It might be that saying, yes, they're here and they're not breaking any laws, or they're at least paying their annual taxes. That's really what it
Exactly.
comes down to. Credit utilization ratio. What kind of credit utilization ratio typically do you need to be at or below in order to qualify for this program?
Well, we would like to ideally have a client within 30 to 50%
Okay,
ratio.
no more
So
than 30 to 50%.
if you have a credit line that's 10,000, keep it at 5,000 balance.
So it's per card and aggregate.
Yeah, per card and
Okay.
aggregate.
All right, formation documents, same as the articles. Guarantor, it's the person who says, if the business blows up, I'm paying back the loan or the lines of credit. All right. Fraud alert. What's the impact of a fraud alert? Why do people have them? Why do we care if they're on there?
Well, we care because it does make our process a little bit more difficult. Sometimes the banks will scrutinize and ask more questions. So
What is a fraud alert?
it's an alert that's placed on your credit in case there was some type of activity that happened without your knowledge. Sometimes identity fraud is one of them. And if someone was able to, you lose your wallet, sometimes you want to put a fraud alert in case you can't get those cards back.
We see this a lot when people go sign up for LifeLock type services where they say, we're going to protect your identity. What they really do is they put fraud alerts on your accounts, and that's it. And then they give you an insurance. That's it. Every time you sign up for LifeLock, boom, you got fraud alerts. That's really what they
Good
do.
to know.
And so we see it a lot. Somebody comes in, we pull their credit, we say, oh, you got fraud alerts on there. Doesn't mean there's been actual fraud. It means they're using a service. So we got to get that removed. We have to get the fraud alert removed before we apply, because there's a certain amount of lenders that say, whoa, fraud alert, I'm out, and they'll just ignore it. So you're dead before you even started. Limited power of attorney. This is one that people have a lot of questions about. In the agreement, in the engagement agreement, in order to get this type of funding, there's a limited power of attorney. What is it? Why do we need it?
Well, it allows the agent to act on behalf of the principal. When it is signed, you grant us power of the attorney to work on your behalf within a certain time frame, not all the time. And then once the funding has been completed, then obviously, this is uplifted.
Okay, so power of attorney. A lot of people get nervous with this one because you may know of a power of attorney for somebody who's become incapacitated, cannot act on their own behalf. They might sign somebody up with a power of attorney. Full power of attorney means that person can do everything for the other person. That is not what this is. This is a limited power of attorney. It's a specific authorization that gives Ed and his team the right to apply directly on your behalf. Otherwise, they can't do that.
Correct.
So it is necessary, but when you read through it, you'll see it's very limited, strictly for the acquisition of capital. It doesn't give them the right to go into your bank account or do anything funny or weird.
That's right.
All right, proof of payment. Some people come in and need to do some pay downs on their accounts, and we need proof before we can start. Unsecured, again, that means that there's no direct collateral associated with the financing. I think I should wrap up our termination finally. All right, back to some examples.
Okay.
Mechanic shop. Tell us about the mechanic shop.
This client came in and we raised $40,000. That's all he wanted, and we got it through two cards. And from the initial welcome call to when he paid the invoice took 9 days.
9 days. So you went real slow on that one.
Yeah, real slow.
All right. Yeah. So he had a projection of 60. Said all he wants 40, and you knocked it out in 2 cards. 9 days. The cards were in his hand. He was happy. Done. And
for that example too, he actually had a relationship with one of the banks that I used, and they overnight the card to him in 2 days.
Sweet.
Yeah.
Okay. Excellent.
How often do you have somebody need less than what they are projected for?
Very rarely. A lot of times they want a lot. And this was just one of those scenarios. We get them every so often, but not a lot.
Yeah, on our side of the fence, we typically get people saying,
they want a lot.
give me everything you got.
Exactly.
Especially because they are lines of credit, and it doesn't hurt you to get as much as you can, especially if you're starting a business. You never know what you're going to need the money for. So get everything you can, because you're not paying interest on it unless you actually use it. All right, and then we got another example here, a nail bar franchise. These have really grown over the last 5 years. Looks like you got $94,000 for this client. That's a pretty good result, especially because the projection was 60. 7 cards though, that's a lot of cards.
It was. This is actually a husband and wife file. I just left the husband out and just focused on the wife. She got $94,500 on her own, 7 cards, and we actually helped her liquidate some of the cards into cash.
Okay, great. So you didn't even use the husband at all.
Well, the husband did get some. He got like $40,000.
Oh, so
Yeah.
between the two, you're able to get almost 150 grand.
Yeah.
So that's a great one. Okay, and that's another thing to bring up. If you got a husband-wife, we do husband-wife combos all the time, and you can increase the amount of funding that you're eligible for by bringing in a credit partner, bringing in a partner, bringing in a spouse. And then I think this is the last example here. We got a signage company, a company that makes signs. What was interesting about this file?
Well, his father came in and helped his son with being a credit partner, and we were pretty fortunate enough to get about $74,000 for his file.
Okay, great. Projection was 50, so again, we overshot the target, 4 cards acquired, and we're using the magic of credit partners.
Yep.
We get a lot of credit partners,
We do.
right? I mean, a good portion of the people come through here, they have something that's holding them back, which is why they weren't able to get funding on their own. And then we can put them together. By the way, we don't provide credit partners. It's got to be somebody that the client knows
Exactly.
or works with closely. We're not doing anything
Can't go
like that.
Craigslist and looking for credit partners.
People used to do that. That was
Yeah.
bad news. All right. Okay, great. So that kind of wraps it up. Remember, next week, quick funding personal loans. These are very exciting. This has really been expanding over the last couple of years. So come back, and we're going to be talking about that. Anything you want to say to wrap it up? Yeah. You got some words of inspiration
Well,
from business owners out there, being a business owner yourself?
Well, the one thing that always stands out is just remember why you started your business, and that will kind of help keep you throughout the whole day while you're running a business, because it's not easy. You have your ups and downs, but just remember, keep in mind and remember why you started.
Why did you start?
First, to help clients who can't, help get business fundings, help entrepreneurs, and secondly, is just for the family.
Cool.
Yeah.
Awesome. All right, everybody, thanks for coming on. Ed, thank you very much for coming on the
Thank you for having
show.
me.
We appreciate it. We will see you next week. Don't forget to subscribe. Darn it, subscribe to the show. Love to see your subscriptions. I'm trying to get to 1,000 subscribers, and it's been taking a lot longer than I thought. We're at the 860 something, so
wow.
help put us over the line. Subscribe to the show. Come back next week, and we look forward to doing a lot more deals together.